What is going on, everyone? Welcome to the very first daily recap. Today is Friday, August 28th. I really wanted to start doing this series because I think it's going to be very beneficial to you guys for you to be able to see how I approach the markets before the New York AM session starts, what I'm looking for, and how I identify if we are going to be either in high probability or low probability market conditions. And then I'm basically just going to take you through either a trade that I took or what ended up being the highest probability trade for the day, so you guys can use that information going forward. So what do I start off with each day? I basically will take a quick look at the 4-hour time frame. So on the 4-hour time frame, you can see we are clearly bullish. We are creating higher highs and higher lows, right? So we are in bullish market structure. Cool. If we take a look at the 1 hour real quick, we pretty much have the same story. We are creating higher lows and higher highs. And now once we scale down to the 15-minute time frame, this is where I'm able to really see what we've done in the past day or so, right? So you could see in the 15-minute time frame, we're kind of just accumulating in general. We have no strong direction, which is okay because when we are framing a trade idea, we love to see AMD play out, which is accumulation, manipulation, distribution. Cool. Scaling down to the 5-minute, what am I always looking for before I even consider taking a trade? I am looking for, number one, draws on liquidity. Now, I personally love to use previous session highs and lows as strong draws on liquidity. So that's going to be the first thing that we take a look at here. What do we have? We have London low that has yet to be hit. London high is irrelevant to us because it's in the middle of this range and we came up and swept it in the morning. Same thing with Asia low here. Obviously, we already came down and took it out, so that is no longer a draw as well. So basically what we're left with is Asia high and London low as our two main draws on liquidity for this session. Now, I want to bring your attention over here to the Asia high. What do we have to the left of us? Another equal high. So equal highs will always be a strong draw on liquidity because we have multiple points of stacked up resting stop orders, aka liquidity. Now, if we take a look at London low, why is this such a strong draw on liquidity? Well, just to the right of it, we have a bunch of generated low resistance liquidity. Equal highs and lows, relative equal highs and lows, low resistance liquidity, all of these are always going to be strong draws on liquidity. Now, we're about 5 minutes before market open. I am going to go down to the 1 minute time frame. My goal coming into a trading session is always to wait for New York AM session to open, which is 9:30 a.m. Eastern time. Or if you're in Central time like me, I'm in Chicago, it's 8:30 a.m. So what I do is I wait for New York session to open, and then I always want to see which draws on liquidity might be hit first, and then if we have a reaction off of that to catch a potential reversal. So let's go ahead and let this play out. Now we have market open right here. This is the 9:30 bell right here. You can see that we start displacing lower. Now I'm still not doing anything, okay? Preferably if I don't have to trade within like the first 5 or 10 minutes, that's typically ideal. However, sometimes something will present itself even within those first 5 minutes to where we could take a really clean trade. So let's see how this plays out. We start trading lower at market open, and you can see right away we take out all of this low resistance liquidity that I mentioned earlier, and we sweep out London low. So what am I thinking now? I'm going to wait to see if we have a reaction off of that London low sweep and then see if we could frame a potential reversal to the upside, targeting all of the buy side liquidity that I mentioned before. Now that we swept out all of that liquidity, let's take a look at what we have for a reaction. Okay, so this is starting to be pretty textbook here. What do we have? We swept London low, which is this red line right here. We have a V-shaped recovery out of that sweep, which is always good. Whenever we hit a draw and have a V-shaped recovery with an inverse, that is usually a really good indication that we are going to form a reversal targeting opposite sides of liquidity. So we inverse this 1 minute gap here. And now I also want to direct your attention over to ES, which is the correlating asset with NQ. And I love to use SMTs as an additional confluence to see if we are going to form a reversal. You can see that NQ swept out these lows and ES did not sweep out these lows. That forms our bullish SMT. So I'm going to put a little checklist down here so you guys could see what confluences I'm going to base this trade off. For one, we have a liquidity sweep. We took out a strong draw on liquidity that also had a bunch of this low resistance liquidity resting in front of it. Number two, we had a V-shaped recovery. Now, when I say V-shaped recovery, it's exactly what it sounds like. It's a strong move down and a strong move up. This right here is very decisive, right? V-shaped recovery, there's no question about it. But if we look at a move like this where we come up and we sort of start trickling up and we're not having any strong displacement to the upside, typically what you might see in this scenario is another another manipulation to the bottom, sweeping out that low, and then a V-shaped recovery after. So V-shaped recovery is super important. Number 3, we have an inverse to the upside. Now this is a 1 minute inverse. Sometimes I use 30-second inverses, 1 minute inverses, 2 minute, 3 minute, 5 minute, but typically a 1 minute inverse is going to give you a great balance of a good entry and strong confirmation. Number 4, like I just mentioned, we had an SMT with ES. So we swept out the lows on NQ. We did not sweep on ES. ES is already V-shaping and heading higher. I'm using this as sort of an optional confluence, an additional sort of cherry on top confluence to let me know that this trade is even further high probability. Number 5, and possibly one of the most important, is opposing draws on liquidity. So as a reminder, we had those equal highs up here at that Asia high. We have newly generated low resistance liquidity right here. So all of these things put together form a really good narrative that we just manipulated to the downside to go take out all of this buy side liquidity. And number 6, which is something I always like to keep in mind in general, regardless of the setup, is time frame alignment. So like I stated in some of my lessons or at the beginning of this video, that all of my time frames are sort of forming the same narrative. So if we're bullish on the 4, bullish on the 15 minute, ideally I would like to be going long in that market, right? Because the old saying is the trend is your friend. So now that we have up to 6 confluences all stacked up supporting our trade idea, I'm feeling really comfortable at this point about placing an entry at this candle closure and targeting buy side liquidity. Now here's a really important point of where I decide to take profits, right? Because we are ultimately targeting this Asia high. That is our most significant high. It's the high of our range. It's the strongest draw on liquidity. But we also have a pretty significant high right here. So what I like to do is set my first take profit at a swing high like this and then drag my stop loss to break even. So that way, if we come and take out this draw on liquidity and want to reverse after that, I still got money out of the markets and I cut the rest of my trade break even, so I don't walk away with a loss, even though technically my trade idea was correct. But when I first put on the trade, I'm obviously going to have my stop loss at this swing low, because if price trades back down here, my trade is invalid, right? So let's let this play out. And as you can see, we take out that first draw on liquidity. That is my first take profit. So now I just have runners. Now I want to see Asia high be taken. This is the point where I already secured profits and I'm going to put the rest of my trade at break even, and we're going to see how the rest of this plays out. So you could see we have a strong reaction after we swept out that liquidity, right? Because now we inverse this 1 minute gap to the downside. We also broke structured to the downside. So if you actually just wanted to take the rest of your profits here, you could, and then you could be done for the day. But for me, I put my stop loss to break even. So I want to honor that break even and see if we do end up targeting that buy side liquidity. So here is my new target, and let's let the rest of this play out. And as you could see, boom, just by a couple ticks right here, I got stopped out break even for the rest of my trade, and not even 60 seconds later, it did hit that buy side liquidity. Now, this is a great lesson here about psychology of trading. Most people will get stopped out by a tick or two, and then it'll end up going to their take profit and they'll just lose it mentally. Okay, this is something you have to let go of. You have to trust in your system. For me, I love taking partials. I love taking money out of the market, putting my stops to break even when we take out a major draw on liquidity, and then just letting the rest of the trade ride. You might manage your trades a little differently, but that's how I manage mine. And today, just by a couple ticks, it didn't work out in my favor. But putting my stops to break even after hitting a major draw on liquidity has saved me more times than it screwed me over. Okay, so I always feel good about securing profits, putting my stops to break even. If I make more, I make more. If I get stopped at break even, that's the reason why I put the stop there anyways. But regardless of that, you can see that price wanted to trade higher, reaching that Asia high and those equal highs. This is a prime example of how much of a magnet draws on liquidity are, especially when we have equal highs, relative equal highs, and low resistance liquidity. So there was plenty of room to take much bigger trades later in the day. Typically, I am taking most of my trades within that first half hour to an hour. I know a lot of people caught this trade as well, which is a great example for you guys. Let me show you what we did. Let's go to the 5-minute time frame real quick so we could see. We have New York PM low with this blue line. What did we do? We came out, swept it. So we have our liquidity sweep. Scale back down to the 1 minute. What do we have? We have a V-shaped recovery. We inversed a 1 minute gap to the upside. This is where a lot of people took an entry. And since this swing high that we just established didn't really have a full sweep, that is even a higher draw on liquidity now for people that entered this trade. And you could see that it played out perfectly perfectly in their favor. So price action was actually really good today. It's been somewhat of a choppy week, but days like this are really nice because they sort of remind you, as long as you follow your system and be patient, the money is there to be made. Let price come to you, don't chase price, and you will set yourself free forever. So I hope you enjoyed this daily recap. I definitely plan on doing these every day, whether I take a trade or not, so that you guys could see inside of my mind how I approach the markets each day. If you guys have any questions, please reach out. I hope you have an amazing weekend. Thank you so much for being here, and thank you so much for all the support on this trading channel. Love y'all.